Awesome. Okay. Well, talk to me a little bit about commercial real estate. I know, a lot of us are familiar, at least, to some degree, about residential real estate, how residential real estate's valued, how it works. You have, comparable sales and stuff like that. But I know commercial real estate's a little bit different. So can you fill us in on how commercial real estate is valued? And again, that's going to be it depends on what asset class. And I'm kind of lumping commercial real estate in, it's a whole bunch of stuff. And if you need to focus on something, maybe focus on retail real estate, because that's what we deal with more often. But yeah, can you give us a kind of an overview of how commercial real estate's valued?
It's to be very similar to a business in that it's valued based on its net operating income, right? Mm-hmm. I mean, if your business isn't making money and has no projections of making money, your business is practically worthless. But you're going to sell your business for a multiple of whatever it is it's making, depending on the industry. Depends on, and again, going back to the ease of ownership and operations, it's going to trade on a multiple of its net operating income. And the same is going to hold true for almost all commercial real estate classes, right? Again, there's going to be some variance in what that multiple is based on market, based on asset class, based on lease types, based on tenant, demographics, all those things. But again, it's just going to be a multiple of what your income is. So that's the best way I can say it.
Are you valuing real estate based on a multiple, or are you kind of flipping it around? I mean, cap rate is basically a multiple flipped around, right?
Correct. I say a multiple because it's easier people to try to grab than discussion of what a cap rate is. I mean, but we can do it real quick. So, let's say we have a $100,000 a year operating business or $100,000 a year operating piece of commercial real estate. That's your NOI, and you sell it for $1 million. You've just sold it at a 10 cap, mm-hmm. right? If you sell it for, so I guess $2 million, you'd have sold it for a 5 cap, right? Mm-hmm. So that's called the cap rate. So yeah, I'm just flipping it around, saying it's a multiple. So if you're making $100,000 a year, you're selling at 10x revenue, or 10x NOI, I should say, not revenue, but 10x NOI.
Right. Yeah. And another way to put it is a cap rate is the amount of return, the percentage of return you can expect unleveraged if you invest. So that's how we got that 5% at a $100,000 net income. If you buy it for $2 million, it's a 5% net operating income unleveraged. So
correct.